morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the Flourish Ventures managing partner, Emmalyn Shaw. Great to see you again, Emmalyn.
Thanks so much for having me, Elliott.
Okay, so before we get cracking, let's learn a little bit more about Flourish Ventures. So Emmalyn, tell us about Flourish Ventures.
So we're a $500 million global fintech fund. We are global in nature. We invest in early stage. Our focus is really on disruptive fintech companies that both provide commercial returns as well as advance financial health and drive economic resilience. We target both direct-to-consumer models as well as infrastructure models that ultimately are driving some true impact.
And I think one of your best-known investments is Chime. Maybe you can tell us about, three of your most notable fintech investments and why you went for them.
Yeah, I mean, maybe I'll take a step back and say, given our focus on advancing financial health and driving economic resilience, we look at a number of different levers, one of which was challenger banks. So Chime was we've invested in 8 challenger banks globally, and Chime was one of our earliest investments. We've also looked at kind of infrastructure and payments related companies, so Flutterwave in Africa, in the US, Unit and Skipify. And on the RegTech side, the pioneers domestically include Alloy as well as Hummingbird, to name a few.
And we've seen valuations on public markets and to a degree on private markets as well hit quite a lot by all the turmoil that's going on in the world and in the global economy. Has this had an impact on the kind of earlier stage investments that firms like yourselves would be making, or is that yet to happen?
Yeah, you are seeing an impact for sure. I think it's probably most pronounced at the later stages where a number of those players have kind of calmed their investing euphoria. And it is trickling down. And I think it's probably most active in the size of the round. So historically, you saw really almost a doubling of seed and Series A size rounds, which is where we primarily operate. And that has kind of come back down to more appropriate levels, reflecting both the valuations being right size as well as the amount of capital that's appropriate for that size of the business.
And does what's going on right now make you want to pause for breath, wait for things to calm down even more, or is now an amazing opportunity to get into fintechs whose valuations are now much more reasonable, or indeed perhaps lower than where you think they should be?
Yeah, look, I've been investing since 2000, and I've seen a couple of recessions. In my mind, this is, it doesn't change the momentum and the opportunity within financial services. I think in particular, obviously the pandemic accelerated a number of innovations and adoption of fintech, and that has only continued to accelerate. The question really is, how do we sustain that and in the type of innovation that can actually be applied specifically in these kinds of markets where data transparency, additional products and services to sustain through economic downturn is definitely an area in which financial services can play an active role. And I think the demand and innovation will continue. So in our minds, both from a macro perspective, there's a lot of momentum, and we certainly don't foresee that shifting anytime in the near future. And then as an investor, I would say, not just as it relates to valuation, although valuations will become, there will be some right sizing. We will see the softening, the euphoria will slow. And we've started to begin to see that as well, of course. And there's huge opportunities to make bets. But I also think as an investor, Flourish is very theme oriented. We focus on investment themes that we track. We're looking for shifts in both innovation and disruption as well as impact. And against that, if you're really theme focused, this is a type of market where it would really serve you. You're looking for the best, the highest quality folks who are really continuing to kind of hit the ground running and deliver across key metrics, and that are thinking strategically about what it means to operate in this market, which is different than what it was in the euphoric state even 2 years ago, right? Being much more thoughtful about cash consumption, be thinking about profitability, et cetera. So against those, I think there's a lot of opportunity as investors to continue to double down much more meaningfully in this market.
And just briefly, Emmalyn, interestingly, your sole LP. Most investment firms, I think, have a number of LPs. You've just got one, which is the Omidyar Group, co-founded by the founder of eBay, Pierre Omidyar. How does that work? Is it any different from having kind of multiple LPs to please, to just kind of like work effectively or invest the money of just one person's kind of family office, I guess?
Great question. Look, I've been in venture again, as I said, for over 25 years at this point. It's been a long time. And, I think that working with a sole LP, someone like Pierre, who was just so focused on both disruption and being on the forefront of technology and disruption, as well as wanting to advance financial health and drive economic resilience, allows for us to be incredibly creative, to deploy capital in the ways that we think are most strategic, and align our vision. He's quite, he's very thoughtful as it relates to providing input, but generally really serves as kind of a more of an advisor as it relates to his day-to-day. But we're thrilled and honored to have someone like him aligned with us as our journey continues at Flourish.
Right, must be good to have a kind of tech legend on your team as well. So look, we've heard now
Absolutely.
about so we've heard about Flourish Ventures. Let's now get to know Emmalyn a little bit better. So Emmalyn, I think you started your career as a project manager for a fintech, then went into investment banking and then investing. It all seems kind of very well planned and kind of strategic. Was it?
Gosh, I wish. One thing I knew pretty early is that I was quite interested in technology. So I, went to undergrad at Cal, at Berkeley, that is, in California. My parents actually immigrated to the U.S. for graduate school, and then ultimately decided to build their lives in America. And I grew up in Southern California, a bit of a part in Huntington Beach, as part of a longboarder and a scholar, if those two can coexist. And when I got to Cal, I just had a real interest for tech, and I'd been exposed to it a little bit through my father and his passion for technology. And actually started working at Apple while I was at college, and then ultimately more on a part-time basis. And then ultimately, when I was actually at Cal, I got a job to work for a portfolio software company, analytics company called Bara. And I fell in love with it. And it was run by a couple of math PhDs, which is one of my majors at Cal. And it was just an incredible opportunity for me to see the other side, the operating side, how technology can be used to advance, in this case, optimize portfolios. And through that, continue to follow my passion for tech. So that's what led me to be an investment banker at Morgan Stanley in the tech group on Sand Hill Road. It's what drove me to work with Peter Curry and Jim Barksdale at Netscape on the Netscape AOL merger, which I'm very much dating myself. And then ultimately to start Inventure January 1st of 2000 with Jim Barksdale and Peter Curry. So it's really what started me on my path to falling in love with tech, and then ultimately really getting onto the operational side and falling in love with entrepreneurs and disruption and how technology can be such an incredible tool for impact. And I think it's been that journey that has kept me sustained, and then launching Flourish and being one of the founding members of Flourish now almost 4 years ago has been just a real opportunity to then take technology, and in particular financial services technology, and watch how it can both disrupt massively industries as well as create positive economic change. And so it started early, and I think it's just progressed through. And I wish I could say I had thought about that from the beginning, but I was just fortunate to be at the right place at the right time and work with some amazing people on the way who taught me and inspired me.
And did I understand correctly, Emmalyn, that you moved to the States and then your parents followed, and your father was working for Apple, was already in tech? Did I understand correctly?
No. So I was born in
No.
Huntington Beach, and I did fall in love with technology as influenced by my parents, that they had quite an interest, my father in particular, in and around technology and financial services. And then when I was an undergrad, actually, I started working at Apple. I worked for their higher ed group on campus, actually, and that's what got me really hooked into technology and working for some really innovative technology companies. In fact, I believe one of my gifts as an employee was the Newton, which again will really date me, but it was the first smart handheld device that was awful and a complete failure, but it just showed how cutting edge at the time Apple was.
Right. Well, I'm glad Thanks for setting me straight on that one, Emmalyn. But in your bio, it was talking about. It says that when not with entrepreneurs, Emmalyn enjoys time with her husband and 6 kids. It doesn't say much else about what you do in your spare time, but I'm guessing that with 6 kids, there probably isn't any other spare time.
That's actually fairly accurate. Yes, I have 6 children, 4 of whom are out of college, actually, and one of whom, 2 of whom rather, are still in the nest, so to speak. And we also have 3 dogs because we love chaos. But yes, it's been an incredible journey, and it's amazing to have a partner like my husband, where we really do partner. He runs a startup, but we somehow manage to partner as business partners as well as partners in life to raise an amazing family.
Amazing. I struggle to manage with just 2 kids and a dog as well, who are mercifully keeping quiet right now. So I take my hat off to you, Emmalyn. So look, a key part of this interview, though, is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with Flourish Ventures managing partner, Emmalyn Shaw. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now Emmalyn, let's talk about the future of finance. Okay, so you mentioned earlier, we talked a little bit about some of your investments. We mentioned Chime as which I think is, or certainly was, still is, one of the biggest fintechs in the world. I think its IPO was put on hold. Other fintechs have done likewise. Many are seeing cuts to valuations, laying off staff, or freezing hiring. You invested at a pretty early stage, so one imagines you're still doing okay. But more broadly, how much pain do you think fintech investors are facing right now, and where is the pain being most felt?
Yeah, look, I think among the earlier stage investors, we've been fortunate to really think strategically, make sure our companies are getting funded at the right levels and are able to sustain the valuations that even during the euphoric stages, they were able to grow into. And so I think you're seeing definitely a little bit more security among the earlier stages. I think as you look later stage, where the game became around keeping up with the momentum and a lot of the other alternative players out there, the corporate venture firms, the hedge funds, et cetera, many of whom are driving up valuation. I think you've seen a lot more pressure and a lot more pain coming out of the later stage in terms of them being able to recoup valuations, recouping the investments they made during trying to keep up and make euphoric bets. So I think that's where you're seeing more of the pain at this point.
Okay, and I mean, investors obviously can't control for supply chain bottlenecks or lockdowns in China, soaring inflation and interest rates, or Russia's invasion of Ukraine. But do some investors, and perhaps I shouldn't mention any names in particular, but there are some well-known investors out there who perhaps were among the most euphoric and enthusiastic of investors helping to push valuations ever higher. Do they bear some of the blame for just throwing too much money at the space and inflating valuations to unsustainable levels?
I think what happens with a lot of these markets, having seen a number of them, is that, during the euphoric times, it becomes a momentum game, right? It becomes about growth and lose sight a little bit about the fundamentals. And against that, a lot more capital gets deployed at companies at stages that are probably not in the best interest of the companies at the time. So, there was some euphoria, there was a lot of momentum. Fintech continues to grow, it continues to be a hot space. So we don't fault them, and we don't fault a number of those players for getting in the game. The question is really, to your point, At what level? How do we price it? What are some of the fundamentals we should be driving towards, underlying KPIs? And I think against that, yes, there should have been more conservatism, at least more thoughtfulness paid to what are the underlying KPIs? What should folks be driving to? How much capital is required and appropriate at this time? And how do we think about guiding these CEOs, many of whom have never been ever through a recession, into thinking longer term? And so I think against that backdrop, there could have been more guidance for sure. And look, I think it's part of the cycle. We've seen it a number of times. This is not foreign territory, but I think you're starting to see a lot more of that learning taking place now, which is hard, but I think it's so important, particularly for many of these new entrepreneurs.
Right, and in May, Sequoia, perhaps the most storied tech investor of them all, published a much talked about memo saying how the recovery is going to be long and about the need for startups to cut costs and focus on profitability. Does that mean that the kind of growth at all costs that we've seen over the last couple of years has gone out the window?
Yeah, I think what it means, I think the answer to your question, yes. I think, look, growth is great in the context of strong unit economics. So if you can sustain that, if you've built the underlying infrastructure to support growth, and you're able to do that on a profitable basis and a thoughtful basis, then I think growth can continue as it's appropriate. This notion of growth with all costs at the expense of underlying operating discipline is the issue. And so really making sure that these entrepreneurs think through what are the fundamentals we should be driving towards. How do we think about sustainability? And particularly in this, what we could call a capital drought, and we don't know how long that's going to be, to really be mindful of what that runway looks like, what some of the real near-term goals are, and how do you align on those. And I think in a world in what felt like unlimited capital, there were many initiatives going on at once, and this notion of prioritization was just not at the forefront. And so really pushing entrepreneurs and helping them and guiding them, and we've certainly done that with our portfolio, working closely with them as to think about how to best prioritize in this condition is really critical. And I certainly believe that Sequoia did a wonderful job, and they too have been through a number of cycles to reflect some of the important learnings that a lot of these entrepreneurs need to be mindful of in this time.
Right, and as you mentioned, Emmalyn, you've been investing in the fintech space for more than 2 decades. What's been the biggest change in fintech in that time?
Yes, well, I've been active in fintech in and out over the last 2 decades. I would say I've probably been most actively focused only on fintech and not on any other part of the sector in the last kind of 4 years. And I would say that even in that, and even kind of thinking back when I was a product manager, I mean, as we said, the pandemic provided such an incredible shift and acceleration of the use of financial services. I think leading up to that, there was a clear breakage of trust among incumbents coming off of the last financial crisis, right? There was a first generation of financial services that surfaced. So folks like Yodlee, maybe the first generation of PayPal, right? There were a number of folks coming into the fold that were starting to digitize more meaningfully and provide opportunities for financial services to emerge. But I think we were still at the very early pieces, and quite frankly, it was still pretty expensive to deliver those. I think in this, what we experienced in the last kind of 4 years has been just incredible momentum, and again, in part driven by a pandemic. And I think a lot of what we're hoping for is the trust that's been engendered, the deepening of the relationship that financial services and fintech in particular have been able to establish with end customers, SMEs, individual users, will continue to sustain as we move forward in this other market, this kind of more rational market, so to speak. We're also seeing, obviously, the emergence of Web3, right? Crypto's been around for over 10 years easily, and it's certainly in the early stages, it felt a little bit like a cult. I think we're starting to see more of a mainstreaming, particularly in certain markets where that has been more widely adopted and more widely received. And notwithstanding the more recent market turmoil as it relates to Web3, we will continue to expect to see a massive shift there as well. And look, in the not too distant future, we will be living in coexisting worlds of DeFi and centralized finance, and people will be operating between their traditional bank account and paying their mortgage, and they'll be sending money and buying things using cryptocurrencies. And I think we're just going to be in a very different world that I think financial services and underlying infrastructure will need to be established in order to really help consumers navigate kind of what will be a more of a hybrid DeFi, CeFi world.
Right, and we'll probably need someone to help protect us from, is it the tiger that JP Morgan had prowling outside its metaverse branches, I think. So we'll have to see what happens there. But look, Emmalyn, it's time now for our rapid fire round of questions. Are you ready?
Absolutely.
Wonderful. So look, I'm going to get the timer on my phone if I can, do it very quickly and nimbly. We've got 90 seconds, just one-word answers if you can. If you're not sure about an answer or something, then feel free to pass. So away we go. Most successful fintechs, as we've been discussing, are very well funded, but a lot of fintechs still losing money hand over fist. Is this totally fine, or is this something we should worry about?
Worry about.
Worry. What fintech segment has the biggest potential over the next 5 years?
Web3.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Trust.
Are we at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
Maybe.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future that you don't want to miss out on?
Sorry, can you repeat that last option?
Part of the future we don't want to miss out on?
C.
Have you ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, 10 the highest, 1 the lowest probability, how likely are the following to happen? That one of the neobanks will be as profitable as a top-tier legacy bank?
10.
Okay, well, we're out of time for the rapid-fire round of questions, Emmalyn, and actually the end of our conversation, unfortunately. I'm sure we could have gone on for much, much longer. So I really just want to thank you, Flourish Ventures Managing Partner, Emmalyn Shaw, for joining me today. Thank you so much.
Thank you so much.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter @Paris Fin Forum. Hope to see you next time. Bye-bye.